Good afternoon and welcome to Financial Booklet. I'm your host, and this is your market update for Wednesday, December 31st, 2025. It's the final trading day of the year, and what a year it has been. As we close out 2025, we are tracking significant price action in the cryptocurrency markets, some major restructuring news from a coffee giant, and the latest regulatory updates from the Federal Reserve that will shape the start of the new year. Here is what is happening in the markets today. We begin with the digital asset markets, where Bitcoin is finishing the year facing some tough resistance. Market data shows Bitcoin's price is hovering right around the $90,000 mark. Analysts have noted that BTC has been rejected at this level several times recently, with some capital flows appearing to shift back into gold and bonds as the year concludes. Despite this current price action, 2025 is being recorded as a truly significant year for industry growth. Reports are calling it a bellwether year for crypto initial public offerings, with a wave of companies successfully moving from private circles to public listings on major stock exchanges. Looking ahead to 2026, the asset manager Grayscale has just released a new report with a fascinating prediction. They argue that the market structure in the coming year will likely be shaped more by regulatory frameworks than by technological fears, like the threat of quantum computing. Speaking of regulation, reports out of the United Kingdom detail new plans to regulate crypto assets in a way that's very similar to traditional financial instruments. Meanwhile, across the Atlantic, Coinbase executives have issued a stark warning to the US Senate. They argue that overly restrictive stablecoin rules could inadvertently give a massive competitive edge to China. In other sector news, NFT marketplaces have reportedly shifted their strategies quite a bit throughout 2025 to adapt to changing market conditions and user demands. And in a more unique story, opposition leaders in Uganda are promoting the use of a decentralized chat application called BitChat, amid growing concerns over internet access and censorship in the country. Now, moving over to the corporate and retail sector, Starbucks has just announced a significant reduction in its physical footprint. The global coffee chain is set to shutter approximately 400 of its locations. The impact is going to be particularly heavy in New York City, where reports indicate that more than 40 stores are scheduled to close their doors for good. In a really heartwarming story about executive compensation and employee benefits, the CEO of Fiberbond, a family-owned company, has left an incredible gift of $443,000 to each of his employees. However, reports do confirm there is a stipulation. The employees must remain with the company for an additional 5 years to receive the full amount of this generous gift. Also in the headlines today, market historians are taking a look back at Nike, which went public exactly 45 years ago on this day. The retrospective analysis highlights the phenomenal long-term capital appreciation of the stock since its initial public offering, serving as a powerful reminder of the potential of long-term investing. Turning our attention to the Federal Reserve and economic policy, several important changes are set to take effect as the calendar flips to 2026. The Federal Reserve Board has announced new pricing for payment services that it provides to banks and credit unions, which will become effective on January 1st. Additionally, federal agencies have released updated dollar thresholds related to appraisal requirements for higher-priced mortgage loans. These new rules will create new exemptions for certain smaller loans. The Federal Open Market Committee has also released its economic projections following their December 9th and 10th meeting. The minutes from that meeting, combined with a somewhat divided outlook among Fed officials regarding the economy in 2026, are currently being digested by both traditional equity and crypto market participants. Everyone is trying to gauge the likely trajectory for interest rates in the coming year. Finally, for some personal finance administration updates, a key clarification has been issued regarding retirement accounts. While today is the end of the calendar year, the deadline for your 2025 IRA contributions remains aligned with the tax filing deadline in April, not December 31st, so you still have time. Additionally, new rules and contribution limits for health savings accounts, or HSAs, and some new Social Security claiming strategies are all set to activate for the 2026 tax year. That brings us to the end of our final report for 2025. Thank you for joining us at Financial Booklet for another year of market coverage. We'll be back tomorrow to kick off 2026 with all the latest financial data and breaking news. For a full list of the stories and sources mentioned in today's broadcast, please check the resource links provided in the description below. From all of us here, have a safe evening and a very happy new year.